In virtually all scenarios, if you're a holder of cash or bonds, you end up a loser when the panic happens to the currency.
You're watching Silver News Daily. Subscribe for more.
The Fed's unpredictable rate cuts are causing chaos in the markets, and one man says this is just the beginning. Clive Thompson predicts that 2024 will be a year of silver, with prices poised for an explosive rally. You might think this sounds far-fetched, but silver has already surged over 35% this year alone. And with the Fed's back-and-forth decisions, it's becoming clear silver is emerging as the only real safe haven to preserve wealth. Stay tuned, because what's coming next for silver could change everything about how you invest in 2024.
Although it's called dollars, pounds, yen, euro, whatever, and although you can move your money from your bank to your wallet one-to-one, it's not at all the same. The central bank digital currency is, to all intents and purposes, a currency created by the central bank, just like the banknotes have been created by the central bank in your pocket. It's not at all the money you have in your bank, which is effectively created by the bank's credit system. Now, what does that mean? It means that over time, they're going to start to say, we want people to use their CBDC wallet for all transactions because it will assist us in anti-money laundering, making sure you're not a terrorist, making sure you're not dealing in stolen money, and of course, it'll help us to collect the tax on transactions. The black economy will disappear. So all transactions have to be via your CBDC wallet. Now you're forced into a situation where anytime you want to do anything with your money, you have to use your CBDC wallet. You want to invest money, you tell your bank to use the CBDC wallet at the bank. You want to buy something in the shop or pay the man who knocked on your door offering to cut your garden. You're not going to pay him cash anymore. You're going to pay with your wallet. Don't ask me how you're going to pop a banknote into that birthday card for your granddaughter. I guess you're going to have to send her a CB. I don't think will be such a thing. We have to send her a CBDC code so she can download it to her wallet. But we get to the point where the only way to transact will be on the CBDC wallet. And then one day, and I'm speculating here, there's a crisis. And the public at large are rushing down to the shops to buy whatever they can, called hoarding. Of course, they might be able to control that by saying you're only allowed to buy one toilet roll and one bag of flour and one bag of sugar, because we control what you're allowed to do with your CBDC wallet, because it's programmable. But at the same time, those who've got a bit more money will be speculating against the currency. What do I mean by speculating? It means they'll be buying anything they can but the currency, which means that the price of tangible assets will be rising.
So let's talk about the Fed for a second. One minute they're slashing rates, trying to calm the markets, and the next they're backpedaling, acting like everything's under control. Confusing? Right. Here's the thing. When the Fed started cutting rates, it was a signal that the economy wasn't as strong as we all thought. And that's when the panic set in. Investors were expecting a steady path, maybe even a few smaller cuts, but then came the backtracking. Now the markets are in this weird limbo where nobody knows what's next. It's like the Fed is playing a game of wait and see with everyone's money. So what does this mean for you and your investments? Well, this back and forth creates a lot of uncertainty, and uncertainty in the financial world is like gasoline on a fire. Things get out of control quickly. And when traditional investments like stocks and bonds start wobbling, people start looking for something solid, something that won't evaporate when the next rate cut or policy shift happens. Enter silver. It's no wonder more and more experts, like Clive Thompson, are saying silver could be the safest bet right now. With the Fed leaving investors on edge, silver is standing out as the go-to option for anyone looking to protect their wealth. The volatility in the market, that's silver's playground. And with everything that's going on, silver isn't just surviving, it's thriving.
Down economy are the financials. That would include the bank, or mainly the banks. The banks have been making hay recently because they could earn 5.5% by depositing money with the Federal Reserve, yet they were only paying most of their depositors 1 or 2%. So as interest rates go down, the margins for the banks get squeezed. That means their profits tend to go down. So we're in a falling interest rate environment. That's probably going to squeeze the bank's profits a little bit more. And of course, coupled with that, we've got a commercial real estate market, which is in a pretty dire straits at the moment because more and more companies are realizing that first of all, there's the work at home phenomenon which is carrying on. Companies which used to have 5 floors now need 3 or 2. And we've got another thing going on, which is the hot desking. I know when I was working most of my career, we had a lot of paper in our drawers and piles of, you had your in-tray, your out-tray, and your clients sent the paper, they filled in forms, you had to process the paper manually. But in recent years, that's all gone digital. People come into the firm, it gets scanned, and you can go to any computer anywhere in the building and you can log on and you'll see the paper which is destined for your processing on your screen. It's not hitting your desk. So you don't need to sit anymore at a specific desk. So that's called hot desking. And more of that's going to happen, which again means less space is needed because you never got an office where 100% of the staff are turning up for work. So commercial real estate is going to continue to be in trouble, but that's also not a good thing for banks because sooner or later, some of these commercial real estate, the people who have borrowed on their commercial real estate, they're going to say, there's no point anymore. My tenant, his lease has come to maturity. He's stopped paying the rent. I can't get anybody else in, or if I can get them in, I can only get them in at half the rent. It doesn't make sense. I'll give the keys back to the bank. Thank you very much. And that means the bank potentially loses money, potentially a lot of money, because it could well be that in certain cases, the total rents being collected are less than the city taxes, especially if you have a nearly empty building. That means your building is actually a liability. It's worth not zero, it's worth less than zero. So, the banks might have some losses ahead of them. I'm not suggesting that we're going to have a banking crisis and all banks are going to go bust, but certainly you probably don't want to be looking at those as.
Now, let's take a quick trip down memory lane. Silver isn't new to this game. It's been around for centuries, quietly acting as a safe haven during times of crisis. Whenever the economy gets shaky, people rush to silver and gold to protect their wealth. And while gold might get most of the attention, silver's got a little trick up its sleeve. It's way more affordable and can be just as powerful in the right conditions. But here's the kicker. Silver isn't just riding on its reputation. It's got a dual identity. Sure, it's a precious metal that can protect your wealth when inflation is on the rise, but silver also plays a huge role in industries like electronics and renewable energy. So while people buy it to safeguard their money, industries are snapping up to, driving demand through the roof. Remember 2008, when the financial markets crashed? Silver followed its usual pattern, lagging behind gold at first. But when things started to settle, silver shot up, outperforming gold by a long shot. Fast forward to 2020 during the pandemic. Same thing. Gold took the lead, but as recovery kicked in, silver went into overdrive. It's almost like silver is that underdog fighter. You don't see it coming until it's already knocking out the competition. And the best part, this cycle is happening again. With inflation still lingering, a potential recession on the horizon, and the Fed's rate cuts adding to the chaos, silver's safe haven status is more relevant than ever. It's not just something to throw in a portfolio for peace of mind. It's becoming the smartest play for people who are watching the storm group.
It's an investment because the profits will be going down. Another area which I think is to avoid in a recession is insurance companies. It's a very funny thing, but for some strange reason, there seems to be an awful lot more fires in warehouses during a recession. More cars seem to crash or catch fire. There's a lot more burglaries, and people have more claims for other things like medical claims and so on. Just one of those funny things about recessions that the number of claims go up. Whilst at the same time, if you're an insurance company, you're keeping cash on the side to pay all those claims, but the interest rate you're earning on that cash after the Federal Reserve's interest rate cuts will be going down. And we mustn't forget this is the first of many cuts that we're expecting. So those are the sort of things you probably don't want to be investing in at the moment, or maybe lightening up on if you've got those investments. But what should you earn when interest rates go down? Well, of course, interest rates, in a way, if they go down, it is quite attractive for all asset classes, including equities, because it means that the alternative way you're going to put your money, which would be cash on deposit, isn't as attractive. Therefore, everything else looks more attractive. But let's look at the things which hopefully survive quite well during a recession and possibly go up. I mean, they won't necessarily go up, but they certainly should survive well. This would include what I call consumer staples. So consumer staples are things like food, beverage, household items, personal care, healthcare, the kind of things where you're not going to change your spending on these items, even if you're worried about your job. You're not going to buy any less toothpaste or soap or washing powder, or drink less. I won't say the name of the soft drink, but let's say soft drinks, or eat less food. Another area which is probably fairly safe if we go into a slowing economy are the utilities, things like electricity companies, water companies, natural gas, those sort of things. Healthcare should be all right. I don't see people cutting back very much on their medicines. So the large healthcare companies which have got medicines that we buy every day are likely to do okay. I don't want to say any of these are going to do great, but they'll be doing okay in a recession. And then, of course, there's things like the telecommunications industry. They've got a very stable cash flow. We probably won't spend any less money on our telephone bills just because there's a recession. And maybe the last thing to look at, and this is in contradiction to what I said earlier about commercial real estate, but I'm going to discuss just briefly real estate investment trusts. There's lots of real estate investment trusts that some of them are linked to commercial property. I probably wouldn't go there.
Okay, so we've talked about silver's history as a safe haven. But what's really pushing silver's prices up right now? Well, it's not just about the investors running for cover. The real game changer is industrial demand, and silver is absolutely critical to a ton of industries. Think about this. Silver is used in everything from the electronics in your smartphone to the solar panels on your neighbor's roof. And with the world shifting more and more toward green energy, the demand for silver is skyrocketing. In fact, silver is a key component in photovoltaic cells, which are essential for solar energy production. So, as countries race to meet their renewable energy targets, silver is playing a starring role. And it's not just solar power. Silver is crucial in manufacturing electric vehicles, medical devices, and even semiconductors. These industries aren't slowing down anytime soon. So, while investors are snapping up silver as a hedge against inflation, industries are driving up the demand even more. Here's where it gets really interesting. The supply of silver is tightening. Mining disruptions, especially over the last few years, have led to a supply crunch. So, while the demand is spiking, the supply just isn't keeping up. And what happens when demand outpaces supply? Prices go up. It's basic economics, but the scale we're talking about here is massive. Just last week, silver prices breached $32 an ounce, the highest it's been in over a decade. That's not slowing down. Analysts are predicting silver could break its previous record of $50 an ounce if this trend continues. The combination of industrial demand and supply constraints is creating the perfect storm for silver to soar. So, while the Fed's rate cuts are shaking things up in the financial world, the industrial world is quietly pushing silver's value higher and higher. That's a powerful combination, and one that's making silver a must-watch investment right now.
Yet, I think it's too early. But in a falling interest rate environment, One of the costs which a real estate investment trust will have less of, that's interest cost. Whereas the rents, if you've got the right sort of real estate, and this is the important thing, which sort of real estate is it? If you have the right sort of real estate, the rents are probably not going to go down. They're probably going to drift upwards. So in a falling interest rate environment, real estate investment trusts, not all of them, but some of them can be quite attractive. Um, I'll turn to gold and silver, Elijah. Gold, which has no income, uh, should be a natural beneficiary of lower interest rates. I think there's a number of other drivers for the gold market at the moment. That's geopolitical uncertainty and also concerns across the board about the levels of government debt, not just in the United States, but in Europe, Japan, UK, and elsewhere. Governments have got into the habit, especially with after during the COVID pandemic, of spending more than they can collect in taxes. And that's causing the levels of government debt to increase because the governments want to keep spending. Now, if you think about it, when the government spends money, they borrow the money from somebody. Doesn't really matter who they borrow it from, or they might borrow it from the central bank. They borrow the money, the government gets poorer, and they give the money to somebody, and somebody gets richer. So as we get more money on the planet, there's more to go around for the purpose of buying everything and anything. And when you have worries about the government debt, one of the places you likely to go is into something which will conserve its value, and that's gold. It's a relatively low risk asset. Of course, it does go up and down, but it's not going to fluctuate with this speed and excitement that equities have fluctuated at. Obviously, we equities have just had a straight line up for the last decade or so, but when they do decide to turn down, equities can turn down with a vengeance. I think if gold does turn down, it'll be fairly modest. I don't think we're going to see a 25% decline, but 25% declines in stock markets.
Now, let's get to the exciting part. Clive Thompson's bold prediction. This isn't just some wild guess. Thompson has a solid track record when it comes to market forecasts. And right now, he's saying that 2024 is going to be a breakout year for silver, predicting a massive rally that could send prices soaring. So why is Thompson so confident? Well, it all ties back to everything we've been talking about. The Fed's chaotic rate cuts, the industrial demand for silver, and its shrinking supply. All these factors are aligning in a way we haven't seen in years. Thompson points out that silver's price already surged by over 35% this year alone, and we're just getting started. Market analysts are backing him up too. They're seeing silver break through critical price barriers, like $1.32 an ounce, which has sparked a wave of fresh buying. And it's not just regular investors jumping in. Big institutional players are taking notice. Hedge funds and other major investors are betting big on silver, which only adds more fuel to the fire. Momentum traders are loving this. Silver's recent performance has caught their attention, and with the market buzzing about its potential, we're seeing more and more of them pile in. These traders thrive on short-term price movements, and silver's volatility is creating the perfect environment for some major plays. Every time silver breaks through another price barrier, it reinforces the belief that a major rally is coming, and Thompson is right there at the forefront of that prediction. So, while the Fed's rate cuts have created a lot of uncertainty, silver is benefiting from this instability. And if Thompson's right, we could be looking at a silver rally like we haven't seen in over a decade. It's no longer just a safe haven. It's becoming the hottest asset to watch.
Can happen very, very easily. So I think the lower interest rates are favoring gold at the moment. I think the economic backdrop is favoring gold. The worries about the levels of government debt are favoring the gold. And of course, something which we did discuss before on our previous program was the question of whether ultimately the currencies have to be reset. We have to start with, give up on the old currency and start with a new one. I mean, I'm not saying that's going to happen tomorrow, but if we get into some sort of emergency, some black swan event, it could happen. They could say, okay, there's a big war, or there's been an earthquake in California, or there's a new plague or pandemic, or whatever it happens to be, or there's a meteorite hits the earth somewhere. Not our fault. We're going to have to, for emergency reasons, restart the currency. And here you are, everybody. Here's $100 or $1,000 or $10,000 and get on with it. And they basically back out of the old debt. Now that wouldn't be a default. It would just be saying you can't spend it. So obviously, the levels of debt at some point, it's the straw which breaks the camel's back. We don't know how far away we are from it. Nobody knows. And nobody knows when the panic starts, or if one starts. Maybe it could keep going for 10 years. I don't think so. And certainly some of the most famous people on the planet, with to do with finance, from Ben Bernanke to Janet Yellen to Jerome Powell, have voiced their concerns, saying the level of debt they've got in the United States is completely unsustainable. So has virtually every president, well, not virtually, actually every president who's come into power in the last decade expressed concerns, yet the debt just goes higher and higher as a percentage of GDP, and nobody knows how long they can keep that going. But I don't think they can keep going forever. I think at some point it all comes to a grinding halt as people say, I don't want the dollar, or I don't want the pound, or I don't want the yen, or I don't want the euro, and they start to look for other things. And what will they look for? Well, the man in the street will probably take everything which is on the shelves of the supermarket, and the wealthier will try and put their money into real estate, into equities, and of course gold.
So, with all this talk about silver, you might be wondering, how does it stack up against other investments like gold, platinum, or even bonds? Well, let's break it down. First, there's gold. Gold is the classic safe haven. It's stable, it's been trusted for centuries, and is a go-to when markets are shaky. But here's the thing. Gold has already hit record highs this year. It's expensive, and for many investors, it feels a bit out of reach. Silver, on the other hand, is more affordable and has way more room to grow. Sure, it's more volatile, but that volatility can be your best friend if you time it right. In fact, silver tends to move faster than gold, meaning when silver rallies, it often outpaces gold's gains by a significant margin. Then there's platinum and palladium. These are also precious metals with industrial applications, but their markets are more niche. They don't have the same widespread use that silver does, especially not in critical sectors like renewable energy and electronics. Plus, platinum and palladium are even more expensive and less accessible for everyday investors. And what about bonds? In times of uncertainty, people traditionally flock to bonds for stability. But with interest rates fluctuating like they are right now, bonds don't offer the same level of protection they used to. You're locking in low returns in a volatile market, and if inflation keeps rising, the value of those returns is going to shrink. Plus, let's face it, bonds are boring. They don't offer the excitement or potential upside that silver does. So, while gold and bonds might offer some stability, they don't have the explosive growth potential that silver does right now. Silver isn't just about playing it safe. It's about seizing an opportunity. And with everything we've discussed so far, demand from industries, limited supply, and the Fed's uncertain moves, it's clear that silver is positioned to be a standout in 2024. If you're looking for a way to diversify your portfolio and capitalize on all this market volatility, silver could be the smartest move you make. It's not just a hedge. It's a high-potential asset that could deliver serious gains.
Reduction. We got the 50 points, the larger of the two. I don't think there was a right answer for the Federal Reserve. Probably, with hindsight, they should have made the first cut back in July, and then they could have done another quarter cut here. There's a certain feeling that they've cut by the full 0.5% because maybe the economy is not really as robust as we've been thinking. And I think the main reason for that, and Jerome Powell has said it himself, is the labor market. We're looking at a situation where, first of all, those job numbers, which have been coming in month after month, terribly good, look like they've all been way overestimated. Every month they reduce the previous month's figure and the month before that, and it's habitual. And when you do that, it makes the current month figure look, or the increase in jobs look that much better. And then about a month ago, they revised down all the numbers through to March this year by nearly 1 million jobs. So the actual growth in jobs is nowhere near as has been they've been making out. And if you look at the household survey, which is a different way of looking at things, the household survey also counts jobs, but it actually counts the number of people working. So the number of people working is less than it was a year ago, even though the number of jobs has gone up. The number of people unemployed is more than it was a year ago. And that's with the benefit of 1.9 million legal immigrants coming into the United States to work over the last 12 months. So we've got a huge increase in the number of people coming into work with legal jobs, yet the number of employed people has fallen. So really, it does say something about the economy, and certainly the American economy, maybe not the immigration community who are coming into work, that people are not really finding jobs as easy as they should have done. And I think that's being recognized now by Jerome Powell, and I think that's the reason he cut by.
So we've covered the Fed's unpredictable rate cuts, the surging industrial demand for silver, and Clive Thompson's bold prediction of a massive rally in 2024. Now, here's the big question. Is silver really the best place to protect and grow your wealth next year? The answer? Absolutely. Here's why. All the signs are pointing in one direction. The Federal Reserve is struggling to stabilize the economy with rate cuts, but that's only adding more uncertainty to the markets. This chaos is fueling a flight to safe haven assets, and while gold has already reached record highs, silver is still climbing with so much room to grow. Silver's industrial demand is skyrocketing, thanks to sectors like solar energy, electric vehicles, and tech. These industries aren't going anywhere. In fact, they're expanding fast. Meanwhile, supply disruptions have created a bottleneck, making silver even more valuable as demand continues to rise. Clive Thompson's prediction of a silver rally isn't just speculation. It's grounded in the reality of these economic and industrial trends. Silver's volatility, while risky for some, is exactly what makes it such an exciting opportunity. We're talking about a potential for explosive growth, with prices projected to breach $50 an ounce for the first time in over a decade. The truth is, silver isn't just a hedge against inflation or economic instability. It's positioned to become a high-growth asset in 2024. And the signs are all there. Surging prices, increasing demand, and limited supply. If you're looking to protect your wealth while tapping into serious upside potential, silver is the play to make. And remember, this isn't financial advice. It's about understanding the trends and positioning yourself smartly in a market that's about to take off. Don't sleep on silver. It might just be the key to securing your financial future as we head into 2024. And if you haven't already, hit that subscribe button to stay updated on more ways to make smart investment moves.
More than expected, or it was sort of 50-50. So the question is, are we actually in a recession, or are we heading into a recession? Well, it certainly looks to me like we're heading into a recession. The official numbers don't say we're in a recession yet, because we need 2 quarters of GDP down. We may get that, because don't forget they revised down the last GDP number that came out. So if they revise out the next one or the next 2, it could well be that we're in it could well turn out that we're in a recession already and just didn't know it. So I think that's the first point, that the economy is definitely slowing. Maybe we're going into recession. And we've also got the cut in interest rates. So what does that mean for investors? Well, one of the things, let's talk about the bad side of the economy first. If we're going into recession, that's not going to be very good for cyclical companies. So what are cyclical companies? These are the companies where the demand tends to fluctuate according to the state of the economy. So, for example, if we have less people working and there's less money in the economy and people are uncertain about their jobs, they'll be buying less luxury goods. They'll be buying less automobiles. Many manufacturing jobs, many manufacturing companies will find that their orders are slowing. So these are some of the things to avoid. You also want to avoid in a recession high debt companies. Those are companies which have got a high level of debt relative to their equity, and or companies which have got poor cash flow relative to their earnings. Don't forget, earnings and cash flow are not at all the same thing. A company can have positive earnings because it's revalued its properties or it's revalued its stock. That's not cash coming in the door. So whenever I look at a company and trying to decide if I'm investing in it, I not only look at how much its earnings are, I also look at how much its cash flow is. That information is readily available. But if you've got a company which hasn't got a lot of cash flow and we go into recession, it's going to become much harder to service its debts and pay its employees. So do look at in a slowing economy. Do look at companies with strong cash flow. Look at companies which have got relatively low debt to their equity, because those who've got high debt to equity are going to struggle a little bit if their sales go down. Uh, Another area to avoid, probably if we're going into a slow